About Friday's move. Friday we saw a very big move, as you know, in all the markets. We wrote today that we thought the move on Friday was a very strange one, because what happened was there was two factors that were the rally. The first one was that the Chinese macro numbers were very much in line with estimates, and I think investors were relieved. They were happy that the numbers were not worse. So I think that was one reason we went up so quickly on Friday. The second reason was the strength in the U.S. equity markets. As you saw, the Dow was up 204 points on Friday, mainly because of the strength of the U.S. banks. And JP Morgan was up something like 6% just by itself, because it reported earnings that were pretty good, given that they took about $5 billion of losses, about $4.4 billion of losses. So when you look at these two factors, it doesn't seem to me that either of them are convincing enough to continue the upward momentum. You know, the Chinese numbers were good, but they still show a slowdown. And in fact, the Chinese premier this weekend, he said things are going to still be very difficult for a long time. Not for a long time, but for a certain amount of time. And he was not very optimistic on prospects. And as a result, the Chinese stock market was down about 1.6% and is now at its lowest level since March of 2009. So I don't think the Chinese numbers were very good. Now, JP Morgan's numbers, okay, they had a profit this quarter, but you know, they had to take a lot of gains from other trading positions to make their numbers look good. So I don't think they're going to have another good quarter next quarter, because you know, the banks, as you know, from both Europe and in the United States, they are under a lot of pressure. So both these reasons are not sustainable in our view. I am most concerned about Europe. Europe, I don't have to tell you, we had this very successful or relatively successful meeting on June 29th where they agreed on a few things. Since then, the progress, it seems to be going backwards. The Germans are now saying that, you know, they still want control over these European budgets before they give any money out or before they issue any collective debt. This fund, the European Stabilization Fund, which is supposed to take over from the temporary fund, that was supposed to be in place July 1st. But because there are court cases in the German courts about the legitimacy of this fund, we still don't have the fund in place. These are all, you know, these are all little details, but they do not inspire much confidence that the authorities are moving quickly to address the issues. And finally, you have the Spanish banks. They, as you know, they got $100 billion of euros, but it's still not certain when they will get the money, what they have to do to get the money, who is going to take some losses as well if the Europeans give them the money. There is talk today in the Wall Street Journal that the bondholders have to also take big losses on their bonds before the money comes in. And the bondholders, many of them are small Spanish investors. So I think we have two main reasons, two main things that are still very much with us and will be with us for the second half of the year. The first is the global slowdown we're seeing in practically all countries. And the second is still the unresolved issues in Europe. And this is going to keep the pressure on the markets, on all the markets for the next several months, either because demand will be weak or because there will be a flight to safety to the dollar. So that's sort of our quick summary of what's going on in the metals markets.